70% of Bitcoin miners' revenue could come from AI by the end of this year, not Bitcoin. The companies that were supposed to protect the most secure network in the world are quietly becoming AI infrastructure landlords instead. And meanwhile, Bitcoin's hash rate, the computing power securing the network, is sitting near an all-time high. So why are the miners protecting that network earning less money than they have in years? Because they're not really mining anymore, not in the way you'd think. Here's the mechanism. In 2024, Bitcoin cut its block reward in half, from 6.25 to 3.125 coins per block. It's called the halving, and it's baked into the code to make new Bitcoin scarcer over time. But it's also cut miner income in half overnight. Transaction fees were supposed to fill the gap. They didn't. As of this month, fees are still sitting under 1% of what miners earn, some of the thinnest margins on record. So hash price, basically how much a miner makes per unit of computing power, is sitting around $31 to $32 per hash per day, a level that leaves many miners at or below break-even depending on their equipment and energy costs. And that's already forcing real capitulation. About 1 in 5 miners switch their machines off completely in late 2025 and early 2026. Running at a loss just wasn't worth it, and new hardware doesn't fix it. The latest machines now take nearly 3 years to pay for themselves, longer than the runway to the next halving in 2028. A machine you buy today might never fully pay for itself before the rewards get cut again. But here's the part most people aren't saying clearly. The biggest, smartest mining companies aren't trying to survive this. They're leaving Bitcoin mining behind. Core Scientific signed a massive deal to host AI computers for a company called CoreWeave and basically became an AI company instead. CleanSpark signed a 20-year, $6.6 billion deal to build AI data centers. Mara is doing the same thing in Texas. Analysts now project AI and HPC workloads could make up 70% of listed miners' revenue by year-end. The companies that were supposed to protect Bitcoin are quietly becoming AI landlords instead, because a steady 15-year AI contract is a much safer bet than unpredictable Bitcoin rewards. And that points to the uncomfortable part underneath all of this. Bitcoin only stays secure as long as miners actually want to mine it. Now, the best-funded, most capable companies are moving their money and machines into AI. That leaves the smaller players holding the line, the ones who couldn't land an AI deal on thin margins with almost no cushion if the price drops again. Is that really who you want securing a trillion-dollar network? So, how do you track this instead of reacting to headlines later? A few things worth putting on your radar. First, watch hash price itself, publicly tracked, and a sustained move below current lows that would signal this squeeze is deepening, not stabling. Second, watch for the next wave of hyperscaler leasing deals. Every time a major miner signs one, that's real capital voting with its feet. Third, there's actually something worth watching right now. A proposed protocol change called BIP 110 is entering its signaling phase this month, and while it's unlikely to pass with support sitting near just 2%, it's a live reminder of how much uncertainty miners are already navigating on top of the revenue squeeze itself. Now, to be fair, people have called the death of Bitcoin mining before, and it hasn't happened. The network's difficulty adjusts automatically every 2 weeks to stay stable, no matter how many miners come or go. The industry has already survived 3 halvings and some brutal drawdowns, and if Bitcoin's price simply climbs from here, this whole crisis story could evaporate in months. It's done exactly that before. The tension is exactly why this is worth watching, not writing off. Bitcoin's network has never had more raw computing power protecting it, and the companies providing that power have never had less reason to keep doing it. Either that contradiction quietly resolves itself, or it's the first sign of a real shift in who actually secures Bitcoin. So tell us where you land. Is this just another cycle Bitcoin shrugs off like it always has? Or is this the beginning of miners walking away from the job for good? Let us know in the comments and subscribe.